The gold and silver reset, why this market pullback could be the best buying opportunity yet. Hello, everyone. It's Rick Fronick from Silver and Gold Solutions. And on this special edition of Gold and Silver Stacking Saturdays, I wanted to share a complete overview of what's been happening in the gold and silver markets, whether it's here in the United States or across the seas in the UK, China, and Asia. I just wanted to share this information because a lot of people are wondering what is going on with the markets right now. A lot of people are hesitant because of everything that's been escalating with the Iran war, and then also how that's impacting things. But people are wondering, why have we had these market, where the markets actually escalated real high, but going back to last year, we had that pullback in October of last year, but then the markets surged, and we had a pullback in January, at the end of January, and then the markets came back up, and then here again, right after the Iran war broke out, we have another dip in the market. So what I wanted to share here is a complete overview of what is actually happening. And a lot of people, I want to make sure that whether you're listening to this or watching this, make sure you follow till the end, because I'm going to really share a nice overview that's going to answer a lot of questions of what you might have and what to expect moving forward, and why there still is a great opportunity here involved in both the gold and silver markets. And I'm also going to share some insight from one of my highly recommended sources that he's going to share a different perspective on what's been happening with the bank purchases and what happened at the end of February and the early part of this year. So what I always like to do is I like to go over the gold silver ratio real quick, okay? And so this is something that, going back to when we first started our gold and silver stacking Saturdays on June of last year, June of 2025, gold was at 33.69 and silver was at 36.02. Now, it wouldn't be nice if those prices were that right now, so we could actually take advantage of what's going to happen, but there's still an opportunity ahead. So what I've done is I have a couple of different key dates over the course of last year, but then when we get into this year, the all-time high for gold was on January 29th, when it reached 55.94 an ounce, and silver's the highest silver was at 121.64. But then when we had that pullback at the end of January, gold fell to 48.97 and silver dipped to 86.30. But you see, as the markets recovered here through February, we got back up to 52.81 and then $94 an ounce. Then, of course, the with the war breaking out and everything, and then the Fed news as far as the interest rates, not going to cut things again. The markets took a dip, and so here we are today, where we're at 44.96, and silver's at 69.92 an ounce. So typically, the gold silver ratio falls in that 60 to 40 range. So okay, right now we're at 64.3 ounces of silver equals 1 ounce of gold. Okay, and like if you go back here, back at the beginning, or going back to last year here, or earlier in the year, I should say, on January 23rd. With gold at 49.86 and silver at 103, that was probably the narrowest gap that it had been in a long time. Okay, so, but this is something that to kind of keep in mind. Now, this is not something that you should base all your purchases on. I'm just saying, keep this in mind when I share the information that I'm sharing throughout this video. So what I want to do here is that one of the key things, the key factors to keep in mind, is the central bank gold purchases. Now, this is going from 2010 through the end of 2025. The quarterly results, or the results for the first part of this year, are not reflected on this chart. But as you can see here, since you go back to 2022, when the Ukraine-Russian war broke out, this spike right here was right after the war broke out, because when the U.S. put sanctions on Russia, it was a red flag, and I mentioned this before in my other podcasts and videos, that when we put the sanctions on Russia, that was a red flag to every other country in the world, that, hey, what if the United States doesn't like something that we're doing? Are they going to put sanctions on us? So that's why you see this massive amount of central bank gold purchases. Now, this is, going across the globe, but you see that was the highest peak was there, but it stayed steady. And here, this is going towards the end of 25, where it started to pick up. And central bank gold purchases are still high. They're a few percentages down from the end of last year, but they're still in this range here. So I want you to keep that in mind as well also. Sorry about that. I wanted to get this, I did actually find this video on X, or Twitter for some of us who still call it that. But this was a very key interview with Andy Schectman. He's the president of Miles Franklin, and he does a real good explanation of what has been happening over the last couple of months here. So let's go ahead and take a listen to this.
5.5 million ounces come to the COMEX vault. Normally they would just go to eligible, sit there, right? Not for sale. 160% of what deliveries could explain, about 39 million ounces, picked up and walked out the door, were delivered out of COMEX. That's over 2 million pounds of silver. Now ask yourself this question. If a mint box of silver Britannias or silver Eagles, 500 ounces in each box, weighs 42 pounds, who in God's green earth took possession of 39 million ounces, over 2 million pounds? Where is it going? Who's running logistics? How many semi trucks had to drive that down the street? And so my point is that what we are seeing across the globe, whether it be in London, which is still bleeding down metal, whether it be in Shanghai, whether it be in the United States, the most well-informed, not just the most well-funded, the most well-informed money on the planet is standing for delivery. And I'll make an analogy like this. First of all, they've been doing this for 16 straight months since Trump won the election. And at that level, when you're talking billions and billions every month, these people do not screw around. They know where the puck is going. Like they asked Wayne Gretzky, how are you so great, Wayne? How are you so much better than all your contemporaries? And he said, the secret to my success was that I didn't ever skate to the puck. I skated to where the puck was going. He was a step ahead of everybody else. And that is what the most well-funded and well-informed traders on the planet are doing here, because what we are seeing in deliveries is so outside the realm of normal. It would be like you waking up in London in middle of January and it was 90 degrees out. You would know that that's an anomaly. You're not about to pull your lawn furniture out knowing that the winter is not over yet. That big of an anomaly. And seeing this happen over and over and over and over again for 16 months tells you this is a trend. Now, again, I'm focusing on silver, but the same thing is true with gold. We've seen this for all of these months, and then we see metal leaving the vault, and then we hear that President Trump said, by the way, silver is now a critical mineral. Now, you folks did it in the European Union as well a year ago, classified silver a critical mineral, and China has in essence done the same thing. The world is now moving to a point where physical delivery is far more desirable than paper promises, and that is what is breaking the system. So this last smashdown, which was completely structural, which was completely engineered, in my mind, was kind of a last-ditch attempt to let these banks who have been shorting it forever realize that the script has changed. And if they don't get on side and cover those short positions, it's an existential threat to the survival of some of these banks. So my guess, the worst is over, and we will see things start to move up. They certainly have shaken out almost in the entirety of all the speculation, who is now sitting on the sideline with the big money, who doesn't use margins, standing for delivery of subsidized prices, covering their short positions, and waiting really for the next leg of this rally to move up without the participation of the big speculators who have been shaken out.
Okay, so I want to actually share another part of this clip here. It's a little bit shorter than this, but the key there is, like he said, that this was something that was planned, it was orchestrated. This wasn't just something that just happened randomly. Okay, so even though the price of gold and silver has gone down, this is part of the reason why it has gone down. I mean, you do have the impact of the war, you do have the impact of the US, the Fed not wanting to cut rates again. So it's putting a little bit of strain, and then of course the value of the U.S. dollar is strengthening, so to speak. But typically, when the U.S. dollar, the value of the U.S. dollar strengthens, that's typically when precious metals take a slight pullback as well, also. But I want to share another part of this clip here, and let me see. Give me 1 second. Because this is something that's going to, it's going to help you get a better understanding overall of, what to look forward moving forward from this day forward. Okay, it's something that you shouldn't. I don't take any of this information lightly. I scour a lot of stuff on the internet, constantly trying to find the best clips and information to share with everybody. And this is what I like sharing with Andy Schectman, because he's a stud, so to speak, in gold and silver. Okay, so let's try this here.
Bring the buy it to because it is wealth. You own enough of it, you might be, but that's not why you buy. You buy to get out of the way of what's coming, and you can see what is coming by rising interest rates, increasing inflation, global de-dollarization, and you can see it by the amount of treasuries that are being sold across the globe. The United States has lost its the moral high ground that we stood upon has been trampled. And I think that the world is realizing that there are other ways to become prosperous and to build your own monetary reality than by holding dollars and holding treasuries. And you can see this is accentuating. So this is why you own gold and silver, and it's not to buy a new Aston Martin, but to get out of the way of really what is coming, and you can see it very clearly if you take a step back.
Some people might say, well, that applied to 2005. The example of the house is wonderful, actually. It just goes to show what the value of gold has been doing over these last few years. And is now a good time for people to get into gold and silver? Because some people might say, well, maybe we've missed the boat. That's not the case, is it?
No, I mean, we've just seen the largest pullback in history in both gold and silver, and yet the deliveries, which betray the price, because the people taking delivery off of COMEX are incredibly sophisticated. These are not normal traders. These are massive institutional traders who are standing for delivering billions of dollars worth of metal. They are telling you where it's going. It's like, don't do as I say, do as I do kind of thing. Don't listen to the rhetoric. Look at what these people are doing. Like I said, when you're spending 9 figures every month for going on a year and a half without no abating, nonstop, these people don't screw around. They know where the puck is going. And when you're spending billions of dollars every month, you are connected at the upper level, then maybe it is the U.S. government doing it. Wouldn't surprise me one bit at all. The Exchange Stabilization Fund, which is the branch of the Treasury, has the ability to do this stuff for national security. Well, silver has been classified a critical mineral. And I'm telling you, they feel the same way about gold and platinum. Platinum's a critical mineral too.
Okay, so I wanted to share that because this is something to keep in mind here. What I'm trying to get across to people is that, don't look at it necessarily from the standpoint of, just the dollar amounts. Because if you watch the gold and silver markets daily, several times a day, and you're watching what's going on, and I do that, it drives you nuts sometimes. It's like, well, what's impacting this or what's causing this to happen? So typically with gold and silver, it is something that if you're looking for, short-term gains or long-term gains or whatever the case may be, the best thing to do is actually have some physical gold and silver, whether even it's just a minimal amount. That's why I firmly, I'm a firm believer in every single person across the globe should have some form of gold and silver in their possession. That's what's really, I think, critical. And whether you do a little bit at a time or you do, like I've shared before in my other videos, there are places that you can actually buy a dollar or two at a time and in gold and silver. And I'll share a little bit more information about that later. But the thing is to have some. Because at some point, what I want to share with you next here is this article, and let me see. Sorry about that. Is this article, and with the article, it's actually going to give a little bit broader perspective on what's going on with the central banks. Okay, I mean the central banks, and then also what's happening across the globe. Okay, because if you have a little bit, like Andy was just saying, these people that are in the know, there is something huge still happening. We do have the de-dollarization going on, but then also there's something more out there that's why, people are actually taking physical deliveries. He was saying in his years, 30 plus years of experience of buying and selling gold and silver, he's never seen it happen to where these actual big entities, so to speak, are taking physical deliveries. So there's something going on behind the scenes, and you're not going to turn on your local news, which is pretty much dictated by powers that be anyways. That's why every news channel shares the same information. It's just as a different announcer or somebody telling you the information. But they're not going to come out and say, oh, by the way, you want to go buy, $100 worth of gold, or you want to have so many ounces of gold or silver on your hand because we're going to change, we're going to reset the monetary system, and we're going to do that tomorrow. No, they're not going to do that. Okay, so that's why I'm a firm believer that everybody should have some form of gold and silver in their possession. Um, so what I'll do here now is, this is titled I have to get this bad part about Zoom is that bar that floats around. Central bank gold sales in 2026, decoding the global reserve shift. Now I will include this article below here, below the video on YouTube and Rumble and that, and then also I'll include the link to Andy Schectman's video there, because that I watched that whole thing and he's got a lot of great information in there, and I highly recommend that you do that. And I have a ton of respect for Andy. He's been doing this for a long time, and everything. 99% of everything that he shared has come to fruition, and he does it backed by a lot because he's constantly in the know on things. So with this decoding the global reserve shift, decoding the macro reality. When gold prices fluctuate near historic highs and amid volatility, central bank gold sales often signal extreme macroeconomic pressure rather than a loss of faith in the asset itself. Official data and institutional reports from March 26 point to three primary catalysts driving these disposals. Okay, so the first is fiscal imperatives and deficit financing. In early 2026, certain sanctioned central banks resumed large-scale liquidations of their physical reserves, facing persistent fiscal deficits and the staggering costs of prolonged geopolitical involvement. These governments have turned to gold as their primary source of international purchasing power, with external assets frozen, like I was making mention of, like Russia and the Ukraine war, and traditional credit channels blocked. Gold remains the only truly liquid hard currency capable of bridging massive budget gaps. And then the second point is the front line of currency defense. The situation in Turkey and similar emerging markets provides a different perspective on central bank gold sales. In March, significant reserves were processed through direct sales and swap operations to defend local currencies. As regional conflicts drove energy prices toward record levels, the resulting damage to trade balances forced central banks to utilize gold as a liquidity source to hedge against the rapid depletion of foreign exchange reserves. So this, like I said, this is giving a broad perspective of what is happening globally. And then here's another point here: strategic capital reallocation. Poland offers a unique case study in the evolution of reserve management. The recent move to liquidate a portion of gold reserves was not driven by distress, but by a strategic pivot. By converting appreciated gold holdings into specialized defense funds for weapon procurement, the government is effectively transforming static wealth into dynamic national security assets, reflecting a prioritization of immediate survival over long-term savings. So there, you're seeing in these 3 points here, this does shed a lot of light of what's been happening on central banks across the globe. And so the structural counterflows, why central banks buying gold remains a long-term anchor. So this is something to keep in mind too. It is critical to distinguish between localized central bank gold sales and the global structure trend. Despite the recent sell-offs, the long-term momentum of central banks buying gold is far from over. This divergence highlights gold's dual role in the modern monetary system. The ongoing de-dollarization strategy continues to drive central banks in China, India, and Asian nations to maintain a steady pace of acquisition. For institutions focused on diversifying away from single currency risks, the price retractment caused by recent liquidations has presented a premier entry window. Okay, so there's a little bit more in the article. I kind of pulled out the high points of it. Furthermore, the World Gold Council reports that a majority of global central banks still intend to increase their gold exposure over the next 12 months. This suggests that while central bank gold sales are driven by short-term fiscal emergencies, the broader trend of accumulation is driven by deep-seated concerns regarding the stability of the current international financial architecture. So this is, like I said, I'll have a link for this article below too if you want to read the whole thing. And then it closes up with the functional evolution. The volatility of early 2026 confirms that the logic of central banks trading gold has undergone a paradigm shift. Gold is no longer just a passive reserve asset, it has become an active tool for monetary survival. When fiat systems are threatened by sanctions or conflict, gold is the only asset that requires no counterparty endorsement and provides immediate settlement. The shift of reserves from west to east is accelerating as some nations are forced into central bank gold sales. Others are aggressively absorbing the supply to build the foundation of a multipolar monetary future. So this is something that I'll actually I'll wait to get to the next screen here, but um, if all these central banks are utilizing, that's the thing is gold is it is a safe haven. It's always been considered a safe haven, but at the same time, it is something that is globally accepted. Both gold and silver, you walk into any country in the world and you have a 1 ounce American gold eagle or silver eagle or like a Canadian maple leaf or a Britannia. No country is going to refuse you to pay for something in that. Okay, so and I'm looking at it from trying to break this down into the average everyday person. So if you have a little bit of gold and silver, whether it's grams of gold or half grams or a 10th ounce, quarter ounce, 1 ounce, um, or silver. It is going to be no matter where you go, somebody will gladly take that. And this is something that I've talked about before because if they come out with, and you haven't heard about any of this in the news lately, it's still like, it's still in the process of trying to become a reality is the digital dollar. And that will be the worst thing for any country because once you have a digital dollar, that government can control exactly how you spend your money. They can, if they don't want you going somewhere, I mean, I heard this. I'm not from China, but I've heard that in China, this is what they do is they can restrict if because they have their tiered society, so to speak. But if they want to restrict you getting gas to fill up your car with gas to drive somewhere, they just don't allow you to use your digital currency. Or if you wanted to take a vacation someplace, but they don't want you to go there, they won't allow you to buy that ticket. So this is something that, when so for people to keep in mind, if they do ever come out with a digital currency, every single thing that you do will be tracked and monitored and controlled. Okay, they could even say if you had $10,000 in your bank account, if you had $10,000 in there, you have to spend this money to keep our economy going. If you don't spend it by such and such a date, we're just going to bring your balance to a zero. That could happen. I'm just trying to give some ideas here. But as to, going back to my point of everybody should have some form of silver and gold in their possession, whether it's both or a little one or a little of another. But this is what this is what people should consider with the current markets. The bull market people are saying, is it done? Is silver and gold going to crash? I've heard some people predict gold down to 3,500. I've seen some people predict silver dropping to 50. But the general consensus is a lot of people that I follow, whether it's Andy Schectman, um, uh, Mike Maloney, and then Jim Rickards. Jim Rickards is still bullish on everything, as far as gold and silver taking off this year. And I still heard some predictions of silver getting as high as close to 500 this year. And then also gold hitting up to 6,000, which in my opinion, it's still part of a reality. I'm not trying to give somebody financial advice. I'm just trying to share my insight on what I've learned from different people and all the research that I've done. But some things to consider as to why this bull market is far from over is central banks are continuing to buy. Okay, yeah, countries are using it to liquidate it to actually, like I was just sharing in that article, to fund different things and to use it as its true value, which is monetary. It's money. It's true money. It's gold and silver are the only true forms of currency. The impact of the war with Iran, the longer that goes and like here in the United States, the price of oil and everything is starting to go through the roof again because of the war in Iran. So the longer that goes, that's going to have an impact on things. But the long-term outlook is gold and silver. Usually, anytime there's any type of war, usually gold and silver markets start spiking right away. In this particular instance here, it has not done that yet. But if history repeats itself, or that's going to add to the additional increase in the bull run as far as the price is going up. And of course, there's still been the talk about the revaluation of gold. Okay, so because currently these central banks in the United States and all these countries, The gold that they have on hand is valued at $42.22 or 0.22222 cents per ounce. So also it would take to help these different countries is for President Trump to say, because with everything based on the US dollar, is to say, okay, now we're going to change the value of gold to, instead of it being $42.22 an ounce, we're going to put it at the current market price of the $4,400 or $4,500. So that's still a possibility. And then there's also been talk about making treasuries gold backed. Okay, so that's something, because the US treasuries is something that is being, a lot of countries are dumping them. And one of the things that would actually prevent them from dumping that and dumping them is to have them backed by gold. And all it would take would be for President Trump or President Trump just to say, okay, from now on, moving forward, all of our treasury notes are going to be backed by gold. Okay. And then also, I just want to just share this, really, this market reset is a blessing in disguise, because back when gold, and I noticed, I've watched what people have done even online. When gold was up over 5,000 and silver was up over $100, people are just trying to buy whatever they could. But now that it's dropped down to our current lows, which is still very high compared to last year, um, people are like, well, I don't want to buy it. Okay, obviously this, I'm talking about the average everyday person, but this is something where this is a great opportunity. Don't wait for gold to hit $6,000 an ounce or silver to hit $300 an ounce to start buying it again. Now is a really great opportunity, whether you do it in small amounts or, just do it once a month or something. Um, so that's why I do want to share this with everybody, because I talked about this before. I'll include a link below as to the company that I'm using to buy in as little as $1 at a time if I'd like. There's a way, I'll have this link, Sound Money, below. And then there's also, um, with it, you can actually create a free account. It doesn't cost you anything to create an account. Okay, you can up to savings of $500 in gold and silver. It's free to do that. So even if you want to try it out, you can create your account and do a couple dollars here and there. Or if you wanted to, do $25 a month or something, you could do that. That's what's nice about it. You can actually use it like a savings account. And then as the market, every time that you log into your account, depending on what the market's done that day, it'll show you the exact value of your account that moment that you log in. So I wanted to point that out because, like I said, my goal has been to share the best possible information to help kind of filter through the noise. And right now, every time I turn around, I'm seeing a new video from somebody come out with some, I'm sorry, I'm going to put it this way bluntly, some BS title trying to get you to click it, and they don't even talk about what's in the video, what the title of the video is. Okay, this is something where, I title this why, this may be the best opportunity yet, because every time we've seen this pullback, going back to October, going back to the end of January, going back to February, every time there's been a pullback, what's happened afterwards? Okay, so in this case here, is the jump going to be as quick as it was before? Not necessarily, but the thing about it is to when these markets reset, they're not going to forever keep going up and up and up and up. And I know everybody would like to see that. I would like to see that. Um, but it's not going to happen. So whenever there's these many pullbacks or many resets, that is the best opportunity to take advantage of it, whether it's just a little bit, or like I'm sharing here with a couple dollars at a time, or whether it's something, I'm not saying go all out, go spend $10,000 on gold or silver. I'm just saying if you do it in an incremental amount, a little bit at a time, when the next wave hits, that value of what you have is going to increase exponentially. So I hope you got some great insight from this. Like I said, I will include the clip for that Andy Schectman, Jim Ferguson video, the link for that below. And then also I will put a link for that article that I shared as well, because this is something, this really is a great opportunity. And it's like, don't wait for gold to start surging past 5,000, silver back up over 100 again to start buying. Depending on everybody has a different financial situation, and I understand that. But if you are able to do a little bit at a time, go ahead and do it, because that would be that's what I tell my family and my sons, and it's something that they take to heart. And this is something that over the long term, gold is not something. It's like with Bitcoin. When Bitcoin's low, that's probably a good time to take advantage of it. So the best thing to do is to diversify and have, that would be my ultimate recommendation, is have a little bit of gold, a little bit of silver, a little bit of cryptocurrency, whether it's Bitcoin, Ethereum, or some of the other ones like XRP or something, but just have a little bit of different assets, okay? Because nobody knows what's going to happen tomorrow or even a year from now. But in the cases, if something does happen where you want to make sure you're able to, you know, react to it, or I shouldn't say react, but to respond to it, and because all along you've been saving a little bit at a time, like I said, whether it's precious metals or cryptocurrency, and even, if you haven't some in the dollars or currency of whatever your country is, it's something that's going to benefit you in the long run. So that would be my biggest tip to people. And like I said, I'm not a financial advisor. I'm just sharing with you what I do myself personally. And if you want to, like, I'll just put it this way, like last year, JP Morgan towards the end of the year said, that they were recommending people, instead of having like typically the savings of gold and silver was maybe 8% top. Now all of a sudden, when they changed their tune to where they're saying that people should have at least 20% of their savings for their future in gold, okay, or precious metals. So that's something to kind of keep in mind. It's like there are a lot of there's a lot happening right now, and it's hard to get filtered through the noise. So I hope that everybody got some great insight from this, because that's always been my goal from day one, from starting this gold and silver stacking Saturdays, was just to try and filter out a lot of the garbage that's online, a lot of the fake stuff or the repeat stuff that is kind of disinformation. But I hope everybody got some great insight. And next Saturday, I will be doing a special Easter presentation. Now, this is something that I will have a drawing. So if you got this far in the video, um, and you're still watching, go ahead and in the bottom, I'll just do it this way. Anybody who comments at the bottom, Happy Easter, Rick, or Happy Easter, Silver and Gold Solutions, I will actually have a drawing during our call next Saturday, and it'll be for some silver. Okay, so it's something, just my way of giving back to those who take the time to watch the videos. I really do appreciate everyone. Like I said, I'm not trying to do this um, to my goal is to share the best information. Okay, so if you got this far in the video, just put in a comment, Happy Easter, Rick, and you'll be entered into that drawing, and we'll take it from there. So I appreciate everybody's time. I hope we got some great insight, and I look forward to seeing you next time, which will be next Saturday. So I hope everybody has a great rest of your weekend, and we'll talk to you again soon. Take care. Bye.